Hello and welcome back to another episode of our Private Equity Market podcasts. My name is Name, and today we are going to talk about a very interesting topic. What are the advantages of investing in private equity secondaries? As you may already know, private equity secondary investments are transactions in private equity funds between a seller and a buyer. This means that the buyer is purchasing limited partnership interests in an existing private equity fund from the selling party. The seller may be a founder, a general partner, or another limited partner. In this type of investment, the buyer does not usually have any control over the underlying investments of the fund but rather is investing in the future cash flows. So, why should you consider investing in private equity secondaries? Well, here are some key advantages. Firstly, private equity secondaries can provide investors with access to a diversified portfolio of private equity funds. This is because the secondary market allows investors who were not able to invest in the fund when it was initially raised to gain exposure to the underlying investments. Secondly, investing in private equity secondaries can also provide investors with a potential liquidity option for their illiquid private equity investments. This can be particularly important for investors who need to free up cash for other investments or to fund their obligations. Thirdly, private equity secondaries can offer investors an opportunity to acquire fund stakes at a discounted price. This is because the selling parties are often motivated to sell their stakes for various reasons, such as to meet their own liquidity needs or to move out of the fund because of its performance. Fourthly, investing in private equity secondaries enables investors to benefit from an established track record of the fund. This means that the buyer can review the fund's historical returns and benchmark them against other funds, potentially reducing the risk of investing in a new, untested fund. Fifthly, private equity secondaries offer the potential for higher returns than investing in traditional asset classes, such as stocks and bonds. This is because private equity funds are typically invested in private companies that have the potential to grow and generate profits, providing potentially higher returns. Lastly, investing in private equity secondaries can provide investors with the opportunity to gain exposure to niche, specialized sectors, or geographies that may not be readily available in traditional investment vehicles. In summary, investing in private equity secondaries can offer numerous advantages to investors, including access to a diversified portfolio, liquidity options, discounted prices, an established track record, potential for higher returns, and exposure to specialized markets. However, as with any investment, there are also risks to consider, such as lack of control over the underlying investments, illiquidity, and potential valuation issues. That's it for today's episode. I hope you found this informative and useful. Stay tuned for more podcasts about private equity markets. Thank you for listening.